Welcome to Markets Now. Michelle Rook along with Brian Doherty, Total Farm Marketing. Mostly lower day in grain and livestock futures trade with the exception of feeder cattle. And Brian, when you looked at the grains, a lot of it looked like a risk off with the crude oil market lower, the dollar pushing higher. Was that most of the pressure that we saw?
I think it was. When you look at something like corn down anywhere from about 3 to 6 cents, that's not a huge day at these price levels. So I call that a sagging price. The bulls are disappointed we didn't get that follow through. It looked like we might finally challenge that 6.95, $7 area in March, and then it just kind of ran out of steam. I think farmer selling has been picking up as well. Beans are an interesting story because they've pulled off their highs now. They hit that 1550 area, upper Bollinger Band, had some profit taking most likely. Look at this big South American crop on its way. Consequently, I think the nervous traders kind of pulled out. I'm not yet convinced that we're done with beans yet. We still have a lot of commitment to the world to get beans in a lot of places. A lot rest on Brazil to get these channels full of beans. Argentina has some weather issues, but the bulls are going to have some fresh news
Right.
pretty soon, and it kind of looks tired to me. It looks like a market that had this right shoulder head and shoulders formation. Looked like that was tired a week ago. Then we punched through that. Now it looks tired again. Yet the idea of this smaller supply, that is what's on hand in farmers, I'm not convinced you as farmers have a lot of beans on hand at all. So if they are in strong commercial hands, if the export market needs to come to the U.S., that might give us one more leg higher before the big supply of South America eventually comes into play.
The one exception is soybean meal kind of rolled over here after making new contract highs. We closed back over under $500 now again. And so do we have all the South American weather premium kind of already dialed into that market?
I think we have to too. We started this around $400 a ton, so you picked up 20% in value, and I'm using round numbers here, but you picked up 20% in value on a poor Argentine crop. Argentina, the world's largest supplier of soybean meal to the world, got aggressive selling beans early on, probably with hindsight, maybe a little bit of a mistake due to their weather struggles and 40-year drought. So consequently, you've got this smaller supply out of South America. Now, on the other hand, you kind of look at around the world and you see that India's been readily exporting some soybean meal to help make up for that void. So if that is the case and the Brazilian crop is marching along toward harvest, and harvest should pick up steam from this point onward, you got to expect that some of these Brazilian beans can also make their way to Argentina, but also into just the world demand needs.
Right.
And I just don't know if there's a catalyst to push beans much higher here. This is a high price historically.
When you look at corn, beans, and wheat, though, do you think some of it just could have been profit taking? We did kind of technically run up into some pretty good resistance areas.
Well, for sure, there's a couple of things. One, we don't have a cumulative traders report to really see who's out there,
True.
and consequently, you've got a wheat market that rallied about 70 plus cents, and it kind of tipped over today. So when you look at the volatility in wheat, it's very high. You can tell that when looking at the option prices. So if you compare that to soybeans right now, an out of the money call for wheat is the same as it is for soybeans, yet wheat is priced half of what soybeans are. So wheat's probably your leader of the volatility market. Soybeans look like a very mature sort of bull. They've just gradually moved up, factored in some issues, but you've got this again, this big supply coming out of South America. So if there's anything disruptive in that weather, more so than we're seeing, then the market may have some fireworks. But it sure looks like it's sort of a mature bull. And we didn't get a big sell signal, but you've got things pushing upper Bollinger Band lines and things that if I'm a buyer in that market and I'm not seeing something perceptively bullish, I'm probably not sticking around very long with my futures
Right.
contracts. I'm moving out quick.
Yeah, and of course, wheat kind of pulled down corn, I'm sure, but the wheat market, we do have some precip in some of those HRW areas. So were we taken out a little weather premium too?
Well, I think you have to when as dry as it's been. Anytime you see any kind of moisture, snow, rain,
Okay.
whatever it is in the radar, and especially this time of the year, we're getting past the hump of winter. That wheat, when it comes out of dormancy, any kind of moisture is helpful. So I think you've got that. I think also too, sort of, yeah, I'm looking at the war and everything's pretty tough over there, escalating. That's in the east. When you look to the west, there seems to be a renewed commitment to farm those acres and farm them well and to invest the dollars to get crops and even sell crops. So Ukraine may not be quite the train wreck from an agricultural perspective that
Gotcha.
one might perceive, but that all remains to be seen. Worldwide, look for Australia to have a big crop. France will increase wheat acres. Kind of watching that eastern Russian wheat crop area, been a little bit dry on that side.
Let's also talk about milk because since you and I last talked, milk has just kind of continued to be in this downtrend. What's going to stop that?
I really don't know right now if you take the perspective that what dairy farmers do very well is they produce milk well. And if you know dairy farmers, historically they have a sort of a practice of when prices are going down, you do what you do best, you produce more. And I think we're
Right.
in that phase of still producing more. So I don't think it's going to be lack of production that's going to pull this or make this market turn around. Market clearing forces, cheaper prices, more exports, all of those things need to come into play with this pullback. But now you're under $18 in milk, a far cry from 22 or 23, big percentage changes. So I think there will be some re-examination of how many heifers we're going to see producers retain and what kind of if the cow's not good, she's gone kind of mentality. If that really starts to step up here, especially beef prices where they're at, we can expect that. So those things are all subtle and little. There's not one big thing. We're past Super Bowl, we're past Christmas. I don't see the demand market all of a sudden shooting higher in the weeks ahead, and you got the spring flush just around the corner. So I'm painting a kind of a grim picture, but that's just the way the market's
Okay.
behaved.
All right. Well, hopefully we can find a bottom sometime soon. Thanks so much, Brian Doherty with Total Farm Marketing and Markets Now.